Welcome back to Philippines Uncut. I'm Buddy Cunanan. Tonight's topic is the art of tax avoidance. And joining us still is the very talented, multifaceted, enigmatic Nick Nangit, tax expert. Anyway, in the first segment, we talked about the SALN, very timely issue. We also talked about BIR assessments.
Right, and Hacienda Luisita.
And Hacienda Luisita, the one good positive news. I mean, President Aquino has been asking for good news, more good news, and that's definitely good news.
That's good news.
Definitely for Matuwid na Daan.
Yes. And not only that, we were able to I think the BIR is able to reach its target also.
Yes, also.
And performing well.
Things are looking good finally.
Right.
I think we've turned the corner.
Right. I just hope they discover the oil in Palawan.
Or the deuterium in the Mariana Trench.
The Mariana Trench.
Okay. So let's talk about now, the root of the matter, and I'm sure a lot of our viewers are interested in this, how to avoid tax. Not evade, avoid.
There's a difference, big difference.
What are the most common and most useful tax avoidance schemes, underscore avoidance?
There's so many, not really very many, but there's a number of them, One is prenuptial agreements. Prenuptial agreements meaning before getting married to somebody, you already discuss the property relations so that there will be no conflicts later on. There are many kinds of property relations. Like you can have total separation of properties. What is yours, what is mine is mine.
What does that mean? Let's say total separate. Coming into the marriage, anything you have
is mine alone and yours is yours alone.
What about something that you will inherit in the future?
If you will inherit it, it becomes part of your property. It doesn't form part of
So there's still complete separation. Let's say
after,
let's say a man and woman get married, then after 10 years, the man's father dies, he inherits ₱1 million.
It's still yours.
Still the man's, all right.
But it depends really on the property regime. Because under the family code, there's the absolute community of property, whereas before, under the civil code, that was before August 1988, there's the civil code. And under the civil code, it has to be the conjugal partnership property. So two different types of property regimes. So not all properties that are earned by the spouses or are put into the common ownership by the spouses will form part of it. So there are properties like when you inherit it, it doesn't form part of the conjugal or absolute community.
And then, but let's say properties that two of you buy together.
Yes.
But it has to be, do you have to specify?
Yes, you have to specify.
Really, let's say if a car is bought, let's say a man and woman, they buy a car, it really has to be put in writing that we're buying
not necessarily. Because if you got married during the family code, then the property that both of you acquire, absolute community of property, becomes part of the
let's say husband and wife, and then let's say they're married now, they have a prenup, complete separation of
complete separation of property.
And let's say the man buys a car. Now,
that's his.
That's his.
That's his, right.
So now, what falls into conjugal property then, if they have this prenup?
It depends. You see, the prenup agreement will gives leeway to the spouses to decide. What do you want to be part of it, or do you want the separation of property? That's a prenup agreement.
But that's my point. So if they purchase something, then they have to specify that this belongs to the both of us. It has to be in writing.
Right, it has to be in writing.
Otherwise, the one who paid for it owns it.
Right.
Clear.
You see, this works well for those where one of the spouses earns more or has more wealth than the other one.
No, but see, Nick, this is also another misconception. When people say prenup, they automatically think a prenup is for people with a gazillion pesos.
Yes, no, not necessarily.
Like heirs to a huge fortune. But tell us, I mean, as a lawyer, as a tax consultant, would you recommend a prenup for even, let's say, ordinary folk who don't have a gazillion pesos?
Only if you have a sizable wealth. Because if you really have not much, then why still have that prenup? And also, it is advisable for those with, let's say, children of a previous marriage. So if you have children of a previous marriage, you have to protect also your heirs. Because who knows that in your current marriage, the second wife or the second husband will not be in favor of your children from the previous marriage. So to protect the interests of your children from the previous marriage.
Or if she has kids of her own.
Then
without that, then they also become your heirs now.
So to avoid conflicts, better enter into a prenup.
But as they say, in this day and age, a lot of marriages don't last. It's a fact. And even if, let's say, you don't have a sizable amount of money or you're not particularly wealthy, wouldn't you say that you would recommend for everyone to get a prenup? So at least if it doesn't work out, then
Yes,
it's easy. It's easier to say, this is yours, this is mine.
That's true.
It's not working out, let's go our separate ways.
That's true. That's true.
No hassle, no
Right.
confusion,
Right.
no
But you
gray
see,
area.
But you see, many who get married are really in love. They don't think about property relations because it puts already a wrong impression. Like one of the spouses say, we're just starting our date together, and you're already thinking of our property relations. So it's a turn off actually. So it's difficult to convince spouses to have the prenup, but it's advisable.
And then when
to have
something
one.
falls apart, then
That's
oh
the
my
only
God,
time they
say,
think about it.
Oh
I
my
should have
God,
thought
I should have
about
I should
this
have
at
thought.
the
So as a
start.
lawyer, you would advise
Yes.
couples watching now,
Yes.
or fiance,
Yeah, right.
couple watching now, to get a prenup, regardless,
Right.
even if you're not rich, even if
Yes.
you're just, let's say, an
Yes.
ordinary employee.
Yes, and also if you tend to be on the promiscuous side,
Well, I mean,
because you might have children from outside the marriage. So
then you shouldn't get married in the first place.
right, you shouldn't get. But many, get married for convenience.
Yeah.
Many do that.
Well, this whole prenup thing is really it's a modern development.
Yes.
In past times,
Right.
way back when, people never even thought about having
it's
prenup.
I think it's a modern concept.
Mm.
Prenup agreements, right? It's advisable.
Okay. Now, what about estate planning? What is that?
Yes. Estate planning is very important for you to be able to avoid taxes. Why? It means simply planning for the future. Instead of, letting your heirs worry at the time of your death, the burden really is the tax. Because the heirs, when you die, what substitutes in your place is the imaginary entity known as the estate.
Okay.
Okay, so if let's say X dies, there's the estate of X that survives. The estate of X is an imaginary being that owns all these assets and has all these obligations, and somebody has to administer that. If there is a last will and testament left, or a holographic will left by the decedent, the one who dies, then there has to be an executor of that, or executrix if it's a female. If there's no will left, then there has to be an administrator of the estate. Okay. Now, it is best to plan beforehand so that there will be less problems, because you see,
What kind of problems?
yeah, you cannot get the properties in your name. You cannot have them transferred in your name, okay, as the heir of somebody who dies if the estate taxes are not paid. But what if the taxes are so high? Let us say you're
How much
supposed
are we
to
talking
pay
about here when you say estate taxes? Let's say for a house, residential property.
at the firm. It depends on the location, but
Okay.
it can range from let's say 1 million at least. So if a
I mean, is there a
person,
percentage? Let's
no,
say
that's the value, at least 1 million, because there's a tax table from 0 to about 20%
Okay.
of a certain value. Okay, so if a person dies and there's a computation made, okay, of the estate taxes, the heirs will be left to pay for the taxes from the
before they
estate.
can even take possession
Before
of the
they
property.
can take possession, before it can be transferred in their
What
names.
happens if they can't pay the taxes? Let's say they
Then
have
it
no
will
money.
be going to the government. It will be escheated in favor of the government.
Now, explain this to me like I'm a 5-year-old.
Okay.
Why do we have to pay estate tax in the first place? Let's
Okay.
say,
Yes.
let's say my father has a property,
Yes.
and he had been paying real estate taxes diligently
Yes.
year after year, and
Yeah,
then he
right.
dies,
Good
and he wants to
question.
give it to me.
Right.
I mean, because,
Yes.
because he died, it's now bequeathed to me.
Yes.
Why do I have to pay taxes to the
Yeah,
government for
it's
that?
a good question because the law says so. The law says that, before
Darn
property can be transferred to somebody at time of death,
Yeah.
estate taxes has to be paid. No choice.
What is the logic behind that? I can't see the moral
it's a
or
ta-
the
yeah,
or
it's
the
the
rationale
tax
behind
for
that.
your ability to transfer your property. It's
Yeah, but
that's
since
the
it's your
concept.
property, you should be. I mean, you should have
Yeah.
the freedom to do with it as you will.
As you will.
Yeah.
But then it's not only you that's concerned here, it's also the state. Because if you die, the state, by all means, can get it from you and distribute it to somebody else. But it reserves the right to you because you are the owner of that property and the law reserves it to you to be distributed to your heirs.
Okay.
So instead of the state getting it from you, you have the right. But then for you to do that, pay first the estate taxes.
And which can be quite substantial.
Yes, very substantial.
Now, taxes, okay, when it comes to inheritance of
Yes.
of assets, and
Yes,
assets
yes.
can be anything. It can be a car,
Yes.
it can be a house,
Right,
it can be
right.
cash.
Anything. Yes.
What the taxes apply to what kind of assets? Just properties, or I mean,
All properties of estate for estate
Yeah.
taxes, yeah, all properties, real properties, personal properties, and by personal properties, tangible and intangible, all the properties that you've left. But of course, not only that, there are
Okay,
deductions.
so we're talking about land. It
Yes,
can be land, can be money,
buildings, money, jewelry,
be
everything.
Okay, wow.
Yeah, you indicate that, so you make a list, In fact, at the time of death, the executor or the administrator will have to notify the BIR by writing a letter stating that the person has died and attach the death certificate. And then a certain number of days again is given, or months, I think. You pay now, file and pay the estate tax return. Of course, it has to be certified by a CPA again. So you attach all the documents. Now, there's a computation. So all your estates will be collated. All your assets will be collated, and then you are allowed deductions. For example, you're allowed to deduct your family home. Okay, the value of your family home, 1 million pesos. Yes. So you minus 1 million pesos. You're allowed also standard deduction of 1 million pesos. Again, minus 1 million pesos. You're also allowed to deduct funeral expenses, but there's a limit. I think 200,000 or 5%, whichever is lower. Okay, of the gross estate. So you're allowed medical expenses
for the during the time that
judicial expenses for settling the estate. Because if you have a will, it has to be probated, meaning you have to go to court and tell the court, hey, this is the will. We want you to recognize it. And the court will say, okay, this is the will, it is recognized. So you have to execute it according to the terms of the will. Okay, so all these expenses can be deducted.
Okay. Now, going back to estate planning,
yes.
what kind of contingencies can one take? Can
yes.
one to plan to avoid all this nasty taxes business?
Okay, in relation to that, like if you know you have sizable property, then probably at the start, why not just sell it to your heir? You can sell your property, okay?
What if your heir has no money to buy the property?
Well, many do that. It's
actually your money to begin with.
Yeah, it's your money, and then you just ask somebody to pay. Yeah. It's just the documents. You see, the law only looks at the documents.
Asks you, where do you get the money to buy this property?
That's a different story. Then there's evasion now.
That's evasion.
That's evasion now, right? Because where will this person get the? Okay. So the thing is, you can sell it to somebody to your heir. You can sell the property. And because you see the estate, you only pay capital gains tax on that if it's real property or land.
Yes.
And the tax rate is 6% of the fair market value or the selling price, whichever is higher.
Okay.
So it's a matter of comparing capital gains tax versus estate tax. If you die later on, at the time of death, there will be a higher fair market value. So the tax now will be higher.
So naturally, you would want the lower one.
Yes, the lower one.
The capital gains tax is less, you would opt for that.
That's one.
Okay.
You can probably sell, or you can donate it.
Donate?
Yes, you can donate.
Let's say I have a son. I want to donate this house to my son.
Yes, but then or donate it to something else, to somebody else, to a corporation wherein your heir is
a stockholder, major stockholder.
That can also be done. The donation rates are lower. The tax rates are lower than the estate tax rates. I think it's from 1 to 15%, whereas the maximum for estate taxes is 20%. So it's lower. Okay. Or you can also form a corporation. A holding company. So I have land. I probably will die, let us say, in 20 years' time, 30 years' time. So right now, what I plan to do is form a corporation, put my land there,
and then
it's my contribution, and then I'll get shares of stocks.
Yeah.
When I get shares of stocks, there can be there's a provision in the tax code, meaning the law on taxes in the Philippines, on tax-free exchange. Meaning, I will give my land to the corporation will give me shares of stock. So I own the company.
Or your heirs can own the company.
Yes, we can all co-own it. Under the law, there's a maximum of, let's say, four who will have majority ownership. So let's say 51% control over the company. So let's say I have a piece of land, a big piece of land. I can form a condominium there or a resort. A corporation will own that. 51% is owned by me and 3 others, maybe my children. So there are 4 of us. So we continue to benefit from it. We may have perks, like we're entitled to use a suite or like for the rest of our lives, right?
Which is like de facto owning it.
Yeah, de facto owning it. It's beneficial ownership, but it's the corporation that owns it, not anymore me. Now, when I die, what happens now? When I die,
your share.
It's only my share
in the corporation.
Yeah, that will be taxed, my ownership, but not the corporation, because the corporation is considered as a separate and distinct person, different from me.
How substantial is the savings, this potential savings in tax payments from forming a corporation and putting the assets there?
Large. There will be large benefits, because why? If you have shares only of stocks, if the corporation declares dividends, meaning income, then you will be taxed only on the dividends.
On the dividends.
On the dividends.
And it's up to the shareholders to decide whether to...
Yes, to distribute or even to decide how much will be the dividends.
Sure.
But in the meantime, you can enjoy the benefits of the pool and the resort area and everything, all the amenities. Okay? You can live a luxurious life without paying so much taxes. And you only pay the taxes on the dividends. Right? If you want to sell your shares to somebody else, probably you want to go abroad, you sell your shares of stock at a certain rate. Again, there's a certain computation, capital gains tax, 5 or 10%, and that's it. As compared to 20% of estate taxes.
That's a lot.
So holding companies can be done.
Okay. What about? Okay, please.
But then of course, there are some questions also on what type of taxes. Sometimes you are curious as a taxpayer. Should I pay this tax or what? You can seek an opinion actually from the BIR by applying for a tax ruling. So there's this law division in the BIR where you submit your position paper and you explain there the facts, and then you want a ruling on this. And the BIR will decide.
Is that division, in your experience, are they efficient? I mean, they must be...
They are efficient. They are efficient.
There must be a lot of inquiries like that.
But today, many tax practitioners find it very difficult to have the rulings validated. Just recently, the BIR has issued a revenue regulation, okay, which says that all previous rulings are no longer honored.
Wow.
Yes, because apparently the tax code was passed in 1998, and all previous rulings...
So they're no longer valid, and all these people
whether,
had...
yes, so that creates now confusion.
Go back again and
right.
and
that
get
creates
new ones.
confusion, because if you now apply for the same facts, the BIR may decide against you.
Wow.
So what is your recourse now? Your recourse is to go to court. Good if the court will side with you, but then in the meantime, you may be made to pay taxes. So the government now gets your money because you pay taxes, and then you'll get later on a refund. But when you get a refund or a tax credit certificate, you cannot use the entire 100%. Sometimes the government asks you, I'll only give you 80% by issuing a tax debit memo, and I only will allow you 80%. Paid 20%. Later on, you can still use that. So, because the government's in need of money. So, it's a matter of policy, but then again, there's no basis in law, because the law simply says you're entitled to the tax credit certificate. So, I suppose that for the courts to again, comply with the social justice provision of the Constitution, the decisions of the court should state specifically, it should be in full. The tax credit certificate should be given in full, so that there's no leeway anymore for the BIR to ask for concessions like, I'll just give you 80%, retain the 20%, pay 20%. Because that happens in practice.
Yes, yes.
But that's a common practice. We can't do anything about it.
What about trusts?
Oh yes, you can form trusts.
What is a trust?
Okay, a trust it's an agreement wherein a trustor, the person who owns properties, will go to a trustee, somebody who will manage the properties for the beneficiary.
And
so
this
let's
trustee can be a
company,
person,
a
it can
bank,
be a company,
right,
a bank.
Right.
Okay.
So I own land, I go to, let's say, a bank, I enter into a trust agreement, so the bank will manage my properties and all income will go to my children, to my heirs. Okay. So in the meantime, the heirs will already benefit. And when I die, I will not be paying as much estate taxes.
What are the cons of the trust?
Well, you have to get a
arrangement?
good trustee, because the trustee has to be reputable. Well, the trustee has to pay premiums also to provide protection to the trustor. Okay, but there are reputable trust companies also for that to manage your funds. Another. Banks also have investment management accounts, which is outside the ambit of the PDIC. Meaning, if you lose your money, savings deposit, you only get a maximum of so much.
Yes, yes.
But the government does not touch the investment management accounts or the trust accounts. That's exempt. The advantage there is you can still get it as a whole. But the disadvantage is if the bank closes down, everything is lost. You cannot even get a certain amount. Unlike the PDIC, you still get something like 250,000.
Yes, yes. So this is outside trust or outside the PDIC?
There are pros and cons. So trust is one.
What would you recommend, let's say, of all these schemes you've talked about in estate planning,
Yes.
what would you, or inheritance, what would you recommend as the safest, surest bet?
It's a combination of so many things. It's a combination. It's best, like, if you are, it's best to sit down probably and then list down, itemize all your properties, and then plan ahead of time. Like, this property, eventually, this will be the amount. So what do I do now? Probably transfer it already in the name of somebody.
While you're still alive.
While you're still alive.
That's the best thing to do,
yes,
really.
Yes, that's the best thing. Plan ahead of time to minimize your taxes. These are tax avoidance, so you minimize. Instead of running later on or letting your heirs worry for you, plan ahead of time.
I've heard about cases where the person, the father or the mother is in the deathbed already, and you have lawyers and accountant rushing to have this person sign, and the person is probably half in, half out of it, and being made to sign documents just to catch him or her before.
And believe me also,
before death.
Many of the cases with the most blood spilled in the Philippines are cases on inheritance.
So it's better to really settle everything, so at least the heirs also don't
because when
have
a
any
person
problems.
dies, heirs from all around will suddenly claim you as their
Let's talk about illegitimate children.
Yes. Okay.
Under Philippine law, correct me if I'm wrong, they get the equal amount.
Yes. Today,
inheritance.
they already get equal as a legitimate child. It used to be 1/2 only of the legitimate child.
And whose fault was this? It was a certain senator in the Senate. I think it was Revilla.
Yes.
Who sponsored this law, right?
Right. I think it's his. I'm not sure if it is his only contribution.
Ramon Revilla Sr.
Yes, his genuine contribution. Well, I heard that he just raises his hand and says I. But this time he had that. Well, because it's favorable to him.
Well, I think he must be one of the most prolific senators in terms of child rearing.
Yes. That's why to protect them, and not only that, the illegitimate children can now carry the surname of the father.
Because of that law.
Yes, because of that law, the putative father, and the illegitimate children can inherit as much as the legitimate children.
So estate planning is also a way for of a protecting your legitimate children from claims by who knows illegitimate parties.
Yes.
Because of this new development.
Oh, by the way, it's good also you mentioned that, because in making wills, it's best to just make a holographic will, because there are two types of wills in the Philippines. You have the last will and testament, which is a formal document. It has so many rules. Okay, it has to be signed on each and every page. It has to be numbered in such a manner or fashion, as compared to a holographic will. A holographic will simply has to be written by the hand of the testator. It has to be signed and dated. That's it. It can be written on any piece of paper. No need for much formalities, unlike a last will and testament.
Excellent.
People don't know that, but it's best to know that now.
Keep that in mind, guys. From tax expert Nick Nangit, holographic will.
Yes.
So Nick, thank you very much for coming in the show. I mean, there's so much more to discuss, but we'll definitely be covering more of taxation and related issues in the days to come. Thank you very much.
Thank you, buddy, for this opportunity.
Thank you. And guys, I hope you learned about tax avoidance today on the show, and we'll surely be featuring this topic in the days and weeks to come. Thank you very much for joining us this week. Catch us next week here at Philippines Uncut, where we talk about the issues that matter to you, because you matter the most. See you next week.